right, traders, this is Blake Morrow. You're listening to the Morning Edge webinar, and yeah, sorry for that hiccup a little while ago. I'm not too sure what happened there, but GoToWebinar just kind of pooped the bed and knocked me out there for a little bit. But no, we're good. We're good to go now. It's just kind of like a weird thing. Anyway, so what we're going to do is we're going to do our analysis of all the majors. If you're tuning in a little bit late, if you maybe if you're just tuning in and perhaps this is the first time, welcome. If you weren't listening in, about 20 or 30 minutes ago, I just want to reiterate, I'm aside from the euro pound long, I've liquidated everything. And ERW asked, what am I so scared about? What makes me so uncomfortable? What makes me uncomfortable is I don't have any Swiss short exposure right now. That makes me uncomfortable. It's not that I'm uncomfortable because I have positions on. When I don't have Swiss short exposure, it makes me nervous. Now you're probably going, well, it's crazy. The stock market's falling right now. What do you mean? Well, because when the stock market stops falling, okay, I want to make sure I have short Swiss exposure. And I agree with Paulie. We're coming into some pretty key support here in the next 15, 20 points in the S&P. So if we start finding some sort of bottom here in the S&P, here I'll just show you really quick. You take the ES futures, and we got our little head and shoulder pattern. We're coming into our 38% retracement here. Okay, hold on, let me get rid of this. We've got our 38% retracement coming in here about 2015. That's also a breakout point right over here. If we get to this level and we bounce, which I'm assuming we will, okay, I want to make sure I'm short some Swiss francs. And if I don't have them, it makes me uncomfortable that I'm not short the Swiss franc right now. But I'll give you the buts, okay? Give you the buts. The buts. The but is that we have, this U.S. retail sales. We've got producer prices. We have University of Michigan consumer sentiment. And I will tell you this, if you were tuning in late, so if you weren't here half an hour ago, I'll reiterate what I said. Whatever comes out of the U.S. data dump that we get today, it's probably not going to alter the thinking of the Fed. So that's why that if like, let's say retail sales come in below expectations, producer prices come in a little soft, consumer sentiment comes back in around 90 and it doesn't get to 91 as analysts are expecting, whatever. If the U.S. data is light today, the dollar is probably going to feel some heat, but don't expect it to last long. Joe said, yes, see more butts. Yes, that's so funny. It's funny because my dad's from the small little farming town in Iowa called Seymour, Iowa. Yeah. Anyway, there's a lot of jokes that go on behind that one. But anyway, Joe, that's good to hear from you, bud. Hope all's well. Anyway, and Daryl's out in Joe's out in New Jersey. So good to hear from you, Joe. Anyway, going back to what I was just saying, any softness that we see in today's data, it could produce some dollar weakness, but I expect that weakness to be fairly limited. I do want to be a buyer of the dollar. Hopefully not today. I'd rather do it next week, frankly, and I'm just telling you right now, I'd rather not see the euro rip up to 109 today. If the euro ripped up to 109, I would sell it. Obviously, and we'll talk about that right now since we got to go into the charts. But I think that the dollar, if we see any dollar weakness, it is going to be very temporary and it's not going to last very long. So, maybe just a couple of days. So let's talk about the euro. So I was explaining a little earlier before I got so rudely interrupted by software not working. The euro dollar is really struggling around the 108 level. It was struggling yesterday. All the spikes above 108 couldn't hold. Finally, in Asia, we busted out because it's an Asian trade. But that's not going to hold. And so we, ripped past 108 here, spiked into Asia up into previous support, acting as current resistance here. I'll take this, previous support, current resistance, knocked our head right into there, knocked us right back down again. Uh, I think that this is trudgingly moving higher, the euro. I do think it was pretty oversold. We do have that inverted head and shoulder pattern we talked about yesterday morning. Okay, we've been discussing this for like we've been discussing this the last 3 days, not yesterday even. We were talking about this possibility. Now that we've taken out the downtrend line, you know, there's risks that we pop higher, but I think any move up to 109 is limited, in my opinion, and that's why I want to be a seller up here. I just don't know if we're going to get there. Now, if you take the high, okay, so you take this most recent high to low, all right, right there, okay. The 24% retracement comes in at 108.50-ish, okay. You know, we have 109, which is our previous support here. Then we have maybe a move up to 110, which is our 38% retracement. All of that is possible. But the one thing I have to mention with the euro is it is so damn weak, and it's just very, very limited rallies at the moment. And so maybe this is what we're doing. And I'm going to have to go with this for now, temporarily. But I think that's kind of the, possible next flag pattern that we're building, okay? Which, look, we're in a weekly, you guys know we're in a weekly bearish flag, right? Wouldn't surprise me in the least bit if we build another flag as we're making our way down. So, you do this, another flag pattern on the way down. The thing is we've taken out the downtrend line, so now we're shuffling and consolidating back and forth, back and forth. I wouldn't be surprised if we popped up to 108.50 and eventually rolled over next week. So what that means is for today, here, let's go out. Actually, let's go to the hourly. So what that means for today, you're going to have to watch support that comes in at 107. What is that? 107. Let's just call it 107.15 for now. Okay. So let me write that down. 1.0715. Resistance 108.50. So just imagine a stab against new highs, brushing new, maybe even higher at 108.40. Okay. There's resistance. Whoops, 108.40. Bias is bearish. You gotta sell these rallies. You know what I mean? You just gotta sell rallies here. And as we stab up into this resistance, whether it's the 24% retracement, the only way we're going to get up here is we have to have a really bad, like October retail sales number. I mean, I think the market for core retail sales, I think the market's looking, core retail sales, we're looking at 0.4%, 0.3% on retail sales. So, and that's, a big difference from last month's miss. So, let's say we don't extend ourselves that much and we get it, instead of 0.4%, we make a 0.2% gain or 0.1% gain. We might get up to the 108.50s or 60s. Okay. It's possible. But yeah, anything beyond expectations, we'll be trading back down at 107 again, or 107.15. All right, let's go over to the cable. So I did get out of my pound dollar short. I really believe the pound dollar is heading lower, but in order to trade the pound dollar myself, I'm just long the euro pound currently. Okay. This is really critical resistance here, the underside of this trend line, and even though I'm not in the position right now, I'm not willing to risk is a spike into highs before rolling over. My opinion at this point is, why hold on to the risk? It was like, for me, it was just taking a little 10 pip loss and just being done with it for now. But ultimately, I think we're going to have a really tough time at this 152.50, 152.60, which is a 50% retracement, which you really, if like the euro spikes back up above 108 and the cable makes it to 152.65, I mean, I might sell it this morning. You know, it depends on the data too. I mean, a lot of this really depends on, you know, how weak or how strong the data is. I mean, like let's say producer prices come in line and retail sales, you know, are below expectations but not really too bad. You know, the cable might pop 30 or 40 pips. I might sell it this morning. You know, I think selling rallies is the way to go, as long as it trades below this 152.65. That is a 50% retracement. It is bearish while we're outside of this triangle pattern. And if you haven't seen my charts in a while, the triangle pattern being right here. Okay, so as long as we are below this blue line and below that 50% retracement, it remains as a bearish trend. Okay. Now, support for the cable. Okay, you can see this nice little, you know, we've been following this nice little channel, and it really, it's, you know, we were following it quite nicely up until, you know, the Asian session or overnight session, and then, you know, everything's gone, you know, consolidative. So those trend lines have been more or less irrelevant. Okay. But what you'll see here, okay, is that, you know, really key support is at 152, but critical support for bulls. So if you're bullish the cable, you don't want to see that go. Okay. And that those lows right here come in at 151.75. Okay, 151.75. That's pretty key support if you're bullish. I don't know why you would be bullish, but if you were, this is where bulls give up. You know, we break below 151.75, and you know you're going to get people throwing in the towel, saying, "All right, I'm done. You know, just get me out." Let's take a look at the Swissy. So again, I'll reiterate. I'm nervous that I don't have any dollar Swiss long exposure. Okay, really nervous that I don't have any dollar Swiss exposure right now. But I will reiterate, I'm a little concerned that the data might come in somewhat light, and the dollar might give us a better opportunity to buy it lower. If I have to chase the Swissy higher over the course of the next week, I'm going to do it, because you guys know, ultimately, we're breaking out. Any which way you slice it. Okay, this is a weekly chart of the Swissy. We have broken the trend line from 2003. We've broken the trend line from 2001. Okay, we've broken every trend line to the up to the downside. We've broken out. I want to be long. I've made a really my whole month has already been made being long this thing. I mean, I've made some really great money being long from down here. As you guys know, we've been buying it all through here. So and exited it 2 days ago at 107.76, or you know, through, I guess it was maybe Monday or Tuesday. Exited all right here, and then I was buying a little bit yesterday, and I lost like 8 pips, and I said, you know, skip it. I'd rather be a buyer on a dip, or if I have to chase it higher, I'm going to chase it higher. Okay, I'm a little nervous because if the data is strong and it's good, there's a good chance that the Swissy could break out. Okay, John, if you can't see the webinar, you might have to log out and log back in. If you can only hear audio, it sometimes GoToWebinar is a little strange. It might take a minute or two to register, and then finally start showing you the image. If it doesn't, just log out, use the same link, log back in, and you should be able to view it from there. I don't know why it does that. Okay. Anyway, it's rare. Okay, going back to the Swissy. So Swissy, I do have an order to buy the dollar Swiss down here at 99.60, just to let you know. It's an order, it's an outstanding order. I had orders stacked, and then as I explained to you the last couple of days, I had orders stacked down here. I've actually removed them all, and I have a single order down at 99.60 that I'm looking to buy the dollar Swiss if we get down there. Um, now, obviously, you have to be on the lookout for an upside break too. I don't think that's, that's definitely not out of the question. So a move above 1.0085 and it's going to start running, plain and simple. All right, so Swissy, uh, point not well. First of all, parity is at point, or support is at 9960 and at 1.0000. Okay, those are two levels of support. Okay, obviously parity is a big number. It's a big round number. We could very easily just dip to parity and then take off again. It's, I'm hopeful that we'll dip to here, but realistically, dips to parity have been bought up, scooped up by everybody. You get to parity and everybody's like, whoop, I'm going to buy as much as I can. All right, so again, I'm hopeful we get here. I don't know if we're going to get here. I'm hoping we get there. Back to this breakout point, I just don't know if that's going to be the case. All right, resistance, 1.0085. We break that, it's off to the races again. We're going to have to chase that stupid thing. So anyway, whoops, bullish. Okay. All right, let's go to the dollar yen. I made 30 pips in the dollar yen overnight. I actually closed it out at 122.57 or something right down here before the morning edge. Okay. I shorted it yesterday at like 88 or so. Whenever we were right here, before, as the stock market was falling, or maybe it was like right here, somewhere right around here. Anyway, I'm out. I don't have any dollar yen. Actually, I don't have any yen exposure anymore. I closed out all of my yen exposure. Now, the thing about the dollar yen is that if you look at the longer term structure of the dollar yen, okay, we came up, retested this trend line perfectly, well, pretty damn perfectly, which was a great short, above 123 and this 123.50 level. Now we've pulled back, and you can see we've had a formidable pullback, and we could really be setting up for a flag pattern too. Now, I personally don't think we're going higher. I actually think we're going lower, but that doesn't mean we can't do this. Okay, it's going to be, deceiving. We look like that, and next thing you know, we go, right through here, right? I still think we're going to get stopped up as we approach this underside of this trend line, but this is a really strong bullish possibility here. Okay, very, very strong bull flag. So, you got to be careful, obviously. Now, a weak data set today, weak retail sales, producer prices, that happens. We're gonna nullify this flag pattern that you see here. But if it's unexpectedly really good data, we're gonna rip higher. Now, so the dollar yen you always have to kind of treat differently than other dollar pairs because it's sensitive to equity market flows. It's sensitive to bond market flows. If the stock market says, wow, strong data, right? Good retail sales, good producer prices, dollar starts to rally, dollar yen might rally. Stock market might stop in its tracks and say, no. Good data, bad stocks. Good data, rates are definitely going higher. Then they start selling the stock market. So the dollar yen could spike up and then back down again because the dollar yen ultimately is going to move pretty closely to equities. So that's why you have to treat this one a little differently. And when I trade the dollar yen, I don't trade it like any other dollar pair. It's usually it's my lone wolf, if you will. Okay, so let's stop here for a second. Let me remove that fib extension. We're going to remove. Okay, we know that's the 786 retracement right there. We're going to remove that. And what I'd like to do is I'd like to see. I bet we're sitting on about a 38% retracement right now. Not quite, but this should hold as support today. So that is 122.30. All right, 122.30. If we break through that, that will kind of nullify that flag pattern, if you will. So 122.30. Resistance, it's hard to say, but I'm going to say resistance, that next level right here, this next price point that we've been to comes in at 123.07, because we start getting up back above 123. You're probably going to get anybody who's bullish tossing out the tossing in the towel, saying, all right, fine, we're going higher. I still think we'll stop up here towards 124, but you'll get some shorts get squeezed right above here. So that's 123.05 ish. We are in a range environment, and the reason why the dollar yen's in a range environment is if you just take it out to weekly. I mean, we're just bouncing around here a lot. Okay. All right. Let's go over to the Canadian. All right. So here's the Canadian. Now, wow, what happened with crude? Crude just crapped the bed. Holy cow. Hold on really quick. Like, I was just looking at crude, like, what, 15 minutes ago, half an hour ago? I was just like, oh, look, crude's getting a nice little lift today. And then all of a sudden we get a bearish engulfing pattern as we're, I mean, literally I was looking at crude going, oh yeah, here we're getting a nice little rally, and then all of a sudden, boop, it's indicative of a very, very bearish trend, guys. That's the problem with crude. Crude is so bearish. It's when this stuff happens, when you're like, when you just when you think, oh, this is the bottom, and then all of a sudden the bottom falls out, that just reinforces what a bearish trend crude's in. I mean, every uptick is sold. Every uptick is sold. I mean, it's bearish, extremely. Now, that obviously should affect the way you trade the dollar Canadian too, because if you're out there trying to short the dollar Canadian or buy Canadian currency, this is what happens to you. You go, oh, look, fine, the stupid Canadian's going to roll over. I'm going to buy some Canadian dollars, and then boop, and it's up in your face, right? And then you're like, God damn it, or gosh darn it, I can't believe I just did that. Same thing. It's just, it's obviously very strong. Or crude's very weak, and the dollar Canadian's, annoyingly strong, I'm sure, for a lot of you. And I haven't been trading the Canadian really the last couple of days. I've been, leaving it alone. It looks strong. Crude looks weak, but I haven't seen it. I missed the dip here to buy it at the 38% retracement yesterday or 2 days ago. I missed that move. So this resistance, even though we probed above it yesterday, it's still obviously very significant. You can see the wick. We couldn't hold a body above there, so that means we couldn't close above it. That's a 786 retracement, and that's on the daily chart. So if you're looking at the daily, from the highs here, okay, 786 retracement still at 133.22. We had a 133.20 as resistance. Yesterday we went as high as 133.40, couldn't hold it, and came right back down. So that means resistance right now is 133.25 still. Do we have any? We don't have any Canadian data. Governing Council member Wilkins speaks. Okay, that's it. So nothing else really. Okay. So anyway, dollar Canadian, there's resistance, support. Okay, this yellow lines were real. Oh, shoot, I didn't mean to do that. Hold on, I'm gonna have to redraw it. I double clicked on it, and all of a sudden it just went all cattywampus on me. So, any dip to 132, this yellow trend line, you got to be a buyer down here. I mean, it's the question is, are we even going to make it? It's like all these other, it's like the dollar Swiss. It's like I want it to dip so I can buy it, Same thing with the dollar Canadian. I want it to dip so I can buy it. I just really want to buy dollars on a dip. And the question that is constantly looming in my mind is, are we really going to get it? You know, are we going to get any type of dip like that to trade off of? That's why I'm hoping for a little bit weaker data today to produce some sort of dip in the dollar over the next day or two, or maybe into Monday next week, so we can buy that. But we'll see. Support right now. Yeah, I mean, we'll just have to write 132. I mean, that's it. 132 support, and we are still in a range environment. I know it's as bullish as it sometimes feels. It really is more or less a range. You know, we're in a range right now, but we're trying to build some bullish momentum here. Okay. All right. When I get back, which if you're new to the Morning Edge, welcome. But we break every 25 minutes. I'm going to go grab some more coffee. I'll be back in about 5 or 7 minutes. When I come back, we'll do the Aussie, the Kiwi, the dollar index. We'll look at the Nordic currencies. We'll look at the peso, and then I'll try to answer a few questions. Today, there's a lot of data coming out, so I'm not going to be able to answer everybody's questions. That happens on big news days. Today is obviously the big news day of the week, so I'll be back in a few moments. Don't go anywhere. Thanks, everybody, for being here, and see you in a few. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Hopefully everybody's having a great trading session. So we're going to finish off with the Aussie, the Kiwi, dollar index, all that fun stuff. Sorry. Let's see. All right. So I'm sorry. I just was chatting a couple guys regarding something. Let's go over to, where am I at? Okay, so we're going over to let's start with the Kiwi. All right. So here's the Kiwi. So I had a short in the Kiwi at 65.23. I took that position off the table. I got out with a very, it's like 10 or 11 pip loss. But I want to tell you guys that this Kiwi dollar is really on the verge of, the potential. Oh, look at this Swissy! Damn Swissy, stop! It's on the verge of really hurting some people, because I believe there's a lot of people playing this inverted head and shoulder pattern, which in my opinion is not a good head and shoulder pattern to play, because if you're playing a neckline that may look like this, something like that. And so if you're tilted up when you're trying to go higher, the profit potential is so much harder to achieve when you've got a complex head and shoulder pattern heading the other way. So I really don't think it's a good possible trade, but frankly, I mean, with gold so weak, crude weak, risk appetite waning, there's a risk that we really start breaking lower anyway. So in order to take the downside pressure off of the Kiwi right now, we have to break above like the 68 or 65.85, 65.80, whatever the high price was. We hit 87. So I'm just going to write 65.85 as resistance. 0.6585. Okay, that's resistance. All right. We are still in a range environment, but I'm going to tell you that if we break through this support here, that's going to flush out a lot of longs in the New Zealand dollar. And I said this yesterday, and I'm going to reiterate. I'll say it again today. We break through this support right here. I'm probably going to reinitiate some Kiwi shorts against a few things, I'm not too sure who asked me earlier this morning, but somebody asked me and said, even you closed out your New Zealand yen. Yeah, I closed out my New Zealand yen. I closed it out for, it's like I was up like 1 or 2 pips from yesterday, because I reinitiated my New Zealand yen short, and then I just closed out this morning just to reduce the exposure. But yeah, that should put the New Zealand yen well below 80 if that happens. And if that happens, then we've obviously got that big head and shoulder pattern on the New Zealand yen that we're all looking at. But a move below this 64.80s would be huge. So there's two levels of support: 0.6480, 0.6500. Okay. Let's go over to the Aussie dollar. Okay, so here's the Aussie dollar, and as you can see, the Aussie's getting into pretty dangerous areas, especially if you're on the short side. Okay, and this is one that I think that if you are short the Aussie dollar, you have to be really careful with. Now, if you're looking at this and you go, oh my God, if the Aussie breaks out here, it's going to be a big breakout. It's going to set up for one. Not saying that it's going to do it quite yet, but the reason why this is a big deal is because now you have the bigger trend line that comes in. You look at the daily chart, and this big trend line is from, like, you go back to September of last year, okay, August of last year. That's the big kahuna. Like, that's what that yellow line, if that breaks, that's what really turns the tide for the Aussie. And I will tell you this: if we break above that, I'm probably going to get long the Aussie New Zealand again. And I won't second guess like my decision making if the Aussie breaks that trend line. And you have to be careful, because if you're like short copper, short precious metals, just the flip side of the Aussie is this is actually not a bad place to be on the short side, like from a risk reward standpoint. I just have a problem with the jobs report this week from Australia and how strong it was. So that's obviously kept me from being short the Aussie dollar, and I prefer to be on the long side. And even if it's not long the Aussie US dollar, being long the Aussie on a cross, like Aussie Canadian, being long Aussie Swiss, being long the Aussie New Zealand, short pound Aussie, something like that. Those are other options instead of trading the Aussie dollar, proper. But anyway, okay, so resistance here, it'd be right there, right? That's it. That's it. 71.70. I mean, I know we got 71.52. I mean, nice little, couple areas of resistance right through here, and plus you got that trend line coming through. This trend line's not, I don't know if it's drawn, if it's recognized the way I'm drawing it. It may not be perfect. So anyway, 71.70 is resistance for now. 71.70. We are in a range, but we have the potential of really moving outside of that range soon. Now, support, dips below 71 pence have been, or 71 cents, excuse me, have been held. Definitely down at 70.75 if we can make our way down there. That seems like a tall order, but we'd have to have really strong Australian data to do that. Okay. All right, let's go over to, where are we at? Okay, dollar index. Okay, so here's the dollar index. Obviously, you guys that have been listening in here know, how bullish it is. Check out what the 4-hour chart did. This is big. This is a big deal. You know why? Because if it breaks, We're going to see a little bit bigger of a pullback in the dollar than some people are expecting. Okay. Let me make that a little different. Should make it a little thicker, right? It? No, it didn't. All right, let's try this again. Damn it. Format. Well, I want it to be thicker. It is thicker. Okay. Maybe a little different dotted there. Now it's all. Right, let's do this. There we go. Okay. All right. So you see that trend line? What a pivot, huh? What does that mean? What does that mean? Well, what that means is 98.50 is really huge support. If that gives way, we just got problems. Dollar's going to have some issues if we break through that. Okay. We're set up perfectly though to rally back to 99.50. What does that mean? Okay. All right. Let's take a quick look over at the peso. Okay, so here's the peso. Let me grab some coffee. I'm out of pumpkin spice. I'm out of pumpkin spice coffee. And I can only do so much of it. I've been drinking this pumpkin spice coffee for like the last 2 weeks, and I think I'm finished with it. This is today's last day. I think I'm done with it for the holidays. I think next I move on to spiked eggnog. Now we're talking. Yeah. Alan asked if we could take a look at Katie's wampus. No, Alan. We're not looking at anybody's wampus. Caddy wampus, not Katie's wampus. Katie's wampus is off limits. Are you sure she's at least 21, Alan? Patrick G said I just threw up in my mouth pumpkin spice. No, it's good. It's Trader Joe's pumpkin spice coffee. It's good. It's just you can only do so much of it. You know, I'm a real dark coffee, like a real bold, flavored coffee. Little cream, little sugar. But man, it's the pumpkin spice. It's good. It's just yeah. All right, so here's the peso. Now the risk is here that we start rallying due to risk aversion. So remember, the peso, I'm not like really excited about it right now. I bought it yesterday, like right here, and I sold it this morning, like right here. I literally got out for a flat. Like I got in and out and didn't make any money and just got out just to reduce exposure. Okay. Personally, I think the peso could, really start to make a move here towards, this 1692. But we have to see some further risk aversion. So we have to see the equity markets continue to break down towards that 2015 level. But I don't know if there's anything to do here with it right at this very moment in time. Just keep an eye on this flag for those of you trading it. For me, I don't have any like specific levels that I'm like, oh, I'm love for it to pivot off of here, because we broke through this, this breakout point. We already, kind of gave that up. I'm not excited about it either way. Here, let's go over to the U.S. dollar Norwegian krona. This thing is just, I mean, look at this bullish consolidation. I know I drew this out yesterday and see it. I took away my drawings from yesterday on accident. I didn't save them is the problem, but we had this drawn out. So if I was trading the US dollar Norwegian krona, I'd just probably buy dips to 860. So I'm going to write that down, 860 to 880. That's where resistance is going to come in. It's bullish. Okay, Norwegian krona, support 8.60. It's pretty important support, as it has been for a while. Okay. 8.80 is a bullish trend. Let's go over to the Swedish krona, because the Swedish krona, although I haven't been looking at it today, it's probably, this is another one that you guys look at it. Look at how bullish this thing is, and look at but we're at the top of its trend. If the euro decides it wants to take a nosedive today, watch the US dollar Swedish krona, because this thing has been just consolidating in this big range. You know, remember a lot of you guys, I remember a lot of you guys were buying down here when we broke that. That was before I could trade it. And so it's closing in on some pretty key resistance levels, obviously. And it looks like we're flagging. But I'll give you the buts. But I don't know what to do with it right at this moment, other than it's threatening. It's flag after flag after flag, you know, which are all continuation patterns in general. James says, like the great coffee in the Army or in the Marines for you. That was horrible stuff. Yeah, I guarded nuclear weapons for a stint in Guam, and in the berthing area, they call it the berthing area, you know, where all of us guards would sleep. Um, you know, when a alarm would go off, it's like a kind of like firefighter type of drill. We all kept our boots next to the rack in the berthing area, and right outside the berthing area was our coffee machine. I'm telling you, this coffee machine, and this is back in the early 90s. The coffee machine was at least from the 50s or 60s, and it had probably never been cleaned. It would just spit out sludge, and we drank it because we'd be so tired. It's so gross. I love it when you open coffee packs and it says it's green and it says coffee. Military issue coffee, nothing like it. Good stuff. All right, guys, it is about 12 minutes before the news comes out. Let's chit chat a little bit. Let me see if I can answer some of your questions really fast. So oh, by the way, your bias chart's done. So go ahead and take a picture of it. I had to kick out some little kid that was in here copying my stuff again. I had to kick him out of the webinar. He copies my stuff and then puts it online, then puts his name on it, which is really nice. Yeah, he was in my webinar again today. I had to remove him. Anyway, let's see.